All right, so I've had some questions on chapter 3, case 3, so I wanted to do a quick video for everyone. Just so everyone is clear, we will do case 3 for every chapter now, starting in chapter 3. So at the end of the chapter, you're going to go to case 3, and it should read, your company sells and services cell phones. They are located in La Jolla, California, and the company does collect sales tax as all of its customers are consumers. So just so we know, that is the case study. If your book says something different, let me know. You might have a different version or edition. We are using the 5th edition. I did not have access to the 2023 book when I needed to make my selection for the bookstores. So this is what we are using. All right, so the first step says to modify settings as follows. Now, you probably noticed when you set your company up in chapter 1 that the book might look a little different than what your screen does. So QuickBooks is a cloud-based software, and Intuit is constantly updating and trying to make it better. And so our book is just a little bit behind, but we should still be able to accomplish everything. All right, so the first settings that they have you change are the company name and the address. So you're going to go to the gear icon and go to accounts and settings. Now, I am not very picky about your company name. We already have our company name set up. And so don't worry about changing that. The important part here is putting in our address. This will help when we go to set up our sales tax. All right, so when you set up your company in chapter 1, it told you to set it up as a corporation. And so you're going to need to change that also. That's something that the book doesn't tell you. And so change it to a sole proprietorship, and then you can enter your address in here, hitting the edit button, the pencil, and then come back up. And now that we have set to sole proprietorship, our next step is to enter our social security number. All right, so I had you change it to sole proprietorship because a sole proprietor is going to have a social security number, whereas a corporation is going to have an EIN number. Our social security number for this is going to be 987-65-4321. Please do not use your real social security number. I do not need to have that. All right, so that's the second step there. We've already done our first 2 steps now in our case study. The third step, C, is for sales. So we're going to come over to the sales tab underneath account and settings. And it says to make sure that track inventory quantity is on. All right, so I'm going to find a track inventory quantity, and it is listed as on for me. If it is not for you, you will need to make that edit and save. Step D is for expenses. So come down to my expenses here, and I'm going to make sure that the track expenses and items by customer is on. Here you can see it is off. So I'm going to swipe that over, make it green so it is turned on. It also says to turn on make expenses and items billable. And then to set default bill payment terms to due on receipt. We are also going to charge sales tax. All right, so once your settings look like this, you will hit save. And that is our expenses section. Now we also want to turn on purchase orders. You can see mine is already on here. All right, and then it says to go to advanced. Now I want to show you something. When you click on advanced, there isn't a section for time tracking. This is because another update happened. So you're going to select time. So the time tracking has its own tab now. All right, so this is where you're going to change into the timesheet section, show service field on, and allow time to be billable set on. Once those are both on, then that section is done and you have completed all of the settings in the first step of the case study. All right, so then we are going to select done. And the next step is to set up our taxes. This is, again, something I want to show you. The book does tell you can go back to Appendix 1, but this is just real quick and simple. And so I'm going to show you as soon as my screen loads here. You're going to go taxes and sales tax. And again, give my computer just a second to load here. I apologize. All right, so then once that loads for you on your sales tax page, you're going to select the green button, Use Automatic Sales Tax. See, you already have your address in here, so you just click Next. When it asks, do you need to collect sales tax outside of California? Put no. Click Next again. And then instead of hitting Create Invoice, you're going to exit out of this window. Select your filing frequency to quarterly, hit Save, and that is all you need to do to set up your sales taxes. That is step 2 of Chapter 3, Case 3. All right, a few other accounts I'm going to quickly show you how to set up because there were some updates in the system, and then I will leave you to do the rest on your own. Feel free to reach out if you have any questions. I can always do more videos, but I do want to show you a few more things before I go. So the next step is going to be creating accounts. And so you're going to do this in the chart of accounts. You're going to go to the gear icon again, and under your company is chart of accounts. You're going to hit the green button once again where it says see your chart of accounts. And then this is where you have the accounts that have already been created for you. And in order to create new accounts, you will hit the new button. Now, the very first account is the checking account. This is one that I like to go ahead and just use an existing account and edit. This cash account here, we will not be using it, but you see it is listed as a bank account. So I'm going to go ahead and edit that account here. Change this tax form section to checking. Change the account name to checking as well. And then I have to enter my opening balance. Now, this tells you in the book to use, I believe, a 2019. That is a very old date. I'm going to use just the last date of last month. And so then moving forward, I can just use my current date. And the opening balance, it says, is $12,000. And so that's what I'm going to put here. Hit save. Yes, and my very first account is created. My checking account with $12,000 in it. All right, and then I'm going to do my fixed assets. This is where it used to be just a really quick, simple check mark and when you're creating your accounts, and now we have to do a couple extra steps. And so I wanted to show you. First of all, actually, let's see, under our assets, we have an account already called Tools, Machinery, and Equipment. I'm just going to edit that to Machinery and Equipment. And then I'm going to make that my parent account for these other two. All right, so it's there. So I'm going to come up and create new. This is an asset. And like I said, I'm going to put these other accounts under that first one. So I'm going to go Machinery and Equipment, and that's going to be my first selection here. Okay, so then the account name, Machinery and Equipment, but this is just the original cost. So when it comes to fixed assets, you're always going to record the asset at the cost you purchased it at. And then we're going to record the accumulated depreciation in a separate account. This account, though, will always remain the same, and we will not change it until we sell that asset. All right, so the original cost for us was $15,000. So I'm going to put $15,000 here. Check what I have. Yes, it looks correct, and hit save. Okay, and then I need to have that separate account, that depreciation account. So I'm going to click new again, and I'm going to put this under machinery and equipment as well. But this is going to be accumulated depreciation. So my account name, machinery and equipment, accumulated depreciation. And I went ahead and abbreviated there. And then my opening balance is going to be, as the book says, $2,000. Now, because I set this as accumulated depreciation, I'll just put that amount, $2,000, in there, and we will be fine. If for some reason your bookkeeping on the side did not have that accumulated depreciation option, you might have to put a minus sign, because as we know, accumulated depreciation decreases from the original cost for our book value. All right, so moving forward, the other accounts that you need to create are going to be notes payable and owner's equity. Those are very simple to the point. Again, you'll just hit new. That first one is long-term liabilities. Under the section notes payable, the account name, notes payable. And again, you're going to make sure to put in your opening balance. And that is $23,000. For those of you that haven't had a lot of accounting background, when we put in notes payable, what that is a long-term note or a loan from the bank. And so we have to have this in there as a liability, meaning it's debt that we need to pay back. And it's long-term because it's going to take us more than 1 year or more than one operating cycle to pay back. All right, so I hit save there. And then you're going to do that same thing for the owner's equity, where you just hit new, fill that out. So it's an equity account. I'm going to put this under owner's equity. And it has no opening balance. And so save, and that is the first 3 steps of your case study, case 3 for chapter 3. Again, let me know if you have any questions or concerns. Your next step will just be going to your products and services, and you're going to add some products, and then you're going to add some services. In there, you're going to then do a journal entry to add your accounts receivable, your prepaid expenses, and your accounts payable. Just let me know if you need anything else, and I hope this helps.